the right stock at the right time.
Hello and welcome. This is All You Need to Know. I'm Agam Vakil. Let's start by taking a look at the global markets, and we have seen a lot of strength come through. As you can see, all the indices are in the green right now. We did see a lot of strength in America. Dow Jones, S&P 500 and the Nasdaq advancing by 1%, and that strength seeped through in the European markets. So you did have the FTSE 100 advanced by like 0.2%. The CAC and the DAX also up by as much as 1.5% on the whole, and that's the reason why we're seeing strength in the Nikkei as well as the Shanghai indices, and that's also showing its implications on the SGX Nifty, which is also advancing at this point in time up as much as 0.3%, inching back towards the mark of 11,800. That's the one we're going to keep an eye on today's day of trade. How did our markets pan out yesterday? Well, we did see advances in the Nifty up by around 1.2%. The mid-cap and the small-cap indices advancing in tandem with the benchmark indices. And we also saw a lot of strength in the Nifty Bank as well as the Nifty PSU banking indices too. The Nifty PSU banking index essentially on the back of SBI and the gains that we saw there. But, well, let's see the other factors. We have the metal indices and then IT indices also advancing in trade, among many others which were in the green yesterday. And moving in terms of ADRs, well, strength coming across for ICICI Bank, Vedanta, Tata Motors, HDFC Bank, or for that matter something like in Infosys too. We didn't see too much of a movement when it comes to Dr. Reddy's or Wipro. But let's take a look at your foreign institutional flows, and that stands at around 252 crores. It's a plus on a net basis, and we're going to have to see whether or not this traction continues, because the domestic institutions have also continued to plow back money into the equity markets at this point in time, with around 1,100 crores odd on a net basis coming through. But when it comes to your contribution, it is essentially Infosys, ICICI Bank and Reliance Industries. Not really much has changed when you consider the top gainers and the top contributors to the Nifty. This has been the story throughout the gains in the Nifty as journey to around 11,700. But let's take a look at the futures and options space. And again, in this case, we must remember that it is expiry, so we're going to start seeing some unwinding coming through in the August futures. And it's the same for the Nifty banking futures too, in its August series, unwinding coming through. However, there are longs building in the subsequent series and expiries. But when it comes to your open interest distribution, not much has changed. We're still looking at 11,500 put, where we have max OI. But as you can see, there's heavy amount of accumulation in around the 11,300, 400, 500 and 600 puts, and this also is an indicative of the substantial amount of support that the Nifty has got at this point in time, and not too much to speak for when it comes to your calls. Again, it was the 11,600 option which was the most active. Well, writing in the puts, unwinding in the calls, as one might expect. The put call ratio edging higher to around 1.84. It's not the highest that we've seen. The highest that we've seen was around 1.91, but that said, it's still well over in the overbought zone, and it's the same for the Nifty banking index put call ratio too. That's moved up by as much as 1.44. And in terms of other stocks that we were keeping an eye on, Raymond and Jet Airways has moved back into the band. Among other stocks that we're watching out for, we do have some weakness in LIC Housing Finance following its earnings, but so which we have shorts here. But when it comes to Wipro, well, more strength coming in, and Piramal Enterprises actually seeing unwinding, short covering coming through for not just the August series but other series as well. So watch out for these. So plenty of stocks to keep an eye on, but more importantly, it is going to be about the benchmark indices, considering the strength that we've seen in the global markets. But with that, let's go across to Bloomberg's Paul Allen for the top international headlines.
US farmers will get almost $5 billion of direct government aid to compensate for losses sparked by the tit-for-tat trade war with China. Soybean growers will get $3.6 billion, and pork producers are number 2 on the list with $290 million. Dairy, sorghum, corn, wheat and cotton producers will also benefit. The payments start from early next month, ahead of the harvest and the crucial midterm elections. France is preparing contingency plans for a no-deal Brexit. The government will present a draft bill in the next few weeks. It will include measures such as looking after Britons already living in France and ensuring what it calls fluid border controls after the UK leaves the single market. London and Brussels had hoped to reach a deal by October, but it's increasingly clear that deadline will slip. China is hitting back at international criticism of its ambitious Belt and Road trade infrastructure plan, saying it will assess doubts in an objective and rational way. The pan-global project aims to link China with Central Asia, the Middle East, Africa and Europe, but some question the cost and the feeling that it's a covert attempt to extend Beijing's influence around the world.
Effective financing and valuable assets have been created for relevant countries and their people, and economic development has been boosted as well. No debt trap has been created in this process.
Recently deposed Australian Prime Minister Malcolm Turnbull is quitting frontline politics. ABC reports he'll resign from Parliament this week, triggering a by-election in his Sydney constituency. He served as Prime Minister from September 2015 until last week, when he essentially lost a vote of no confidence in the Parliamentary Liberal Party. Turnbull leaves politics with his party trailing in the polls. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
It's been a long time, and this is something that's very special for our manufacturers and for our farmers from both countries, for all of the people that work for jobs. It's also great trade, and it makes it a much more fair bill. And we are very, very excited about it. As far as Canada is concerned, we haven't started with Canada yet. We wanted to do Mexico and see if that was possible to do. And it wasn't, I think, it wasn't from any standpoint something that most people thought was even doable when we started. If you look at it, you remember at the beginning, many people thought that this was something that just couldn't happen because of all of the different factions, all of the different sides, and the complexity. And we made it much simpler, much better for both countries. Canada will start negotiations shortly. I'll be calling the Prime Minister very soon, and we'll start negotiation. And if they'd like to negotiate fairly, we'll do that. You know, they have tariffs of almost 300% on some of our dairy products, so we can't have that. We're not going to stand for that. I think with Canada, frankly, the easiest thing we can do is to tariff their cars coming in. It's a tremendous amount of money, and it's a very simple negotiation. It could end in one day, and we take in a lot of money the following day.
On to Indian equity markets. Stock of the day is Orient Refractories, where the promoter has sold off a more than 3% stake in the counter for a consideration of around 84 crore. Dutch US holding BB, which is the promoter, the majority shareholder also in the company, which is sold 3.313 stake for a consideration at a price of around 224 per share, which is at a discount of nearly 16 to 17% as per the previous market price. Now, do also bear in mind the fact that the shares in yesterday's trading session surged as much as 17% to the lifetime high level post this block deal. Overall, promoter holds around 70% stake as per the June shareholding pattern. And let's look at the buyer here. HDFC small cap bought in more than 1% stake in the counter at a price of around 224 per share. And also we have L&T Emerging Business, which has bought in close to 2% stake in the counter. Overall mutual fund holding stood at more than 5% as per the June shareholding pattern. Let's look at the overall shareholding pattern for the company, where the promoter shareholding stands at around 69.6% and the public shareholding remains stable around that 30% kind of level. Well, if you talk about Orient Refractories, it's the fabricator of metal products with a market capitalization of around 3,233 odd crore. The company has fetched a return of nearly 19% on 1 year basis and separately has also announced plan to merge two of its unlisted subsidiaries, which has been viewed positive by many brokerages. This merger is expected to be completed in a span of a next 9 to 12 months. Also, if you look at the financial picture of the company, it's a debt-free company that we're talking about. Return on equity of this company has been fairly decent, around that 30% level on 3-year basis. And however, the sales growth, the dividend payout has been healthy enough. The dividend payout stands around that 37% level. And if you look at the sales growth for the company, that for the compounded annual growth rate for 3 years has been at a moderate level of around 11 to 12%.
Focus to currency and bond markets. Talking about Indian rupee first, it erased all of its early gains and ended at a record closing low of 70.16 levels against the dollar. Now, traders do believe that the home unit depreciated yesterday by 25 paise, largely on the back of month-end dollar demand that we have seen from importers. That apart, rising crude oil prices along with surging current account deficit has been weighing on the rupee of late. Well, speaking of the bond market, sovereign bonds too declined yesterday as 10-year benchmark bond yield ended 2 basis points higher at 7.89%. On the global front, dollar index dropped to nearly 4-week low yesterday and ended 0.4% lower, well below the crucial 95 mark, and it now trades lower for the third consecutive session near 94.70 levels. The dollar dropped yesterday after US President Donald Trump said that US is pursuing a new deal with Mexico, and that largely weighed on the dollar yesterday. And lastly, speaking of dollar rupee, now it is trading at 70 a dollar in the non-deliverable forward markets, which indicates a positive opening for Indian rupee in today's trade.
Well, amongst the stocks that we are tracking are Adani Power and GMR Infra, and this is on the back of a Bloomberg News report which says that Adani Power is nearing an acquisition of GMR power plant. In fact, that's a 1370 megawatt thermal power plant. What they've also said is that Adani Power will take over about 3,800 crores of GMR units debt. In addition, they will also assume non-funded liabilities of about 1,400 crores, and the deal is likely to be announced within the next few weeks. So, aside of the impact of the Allahabad High Court ruling, which will impact many companies, power companies, these two are another ones to keep an eye out for. As also JBF Industries. Now, the board has approved a plan for restructuring of JBF Petrochemicals, which is its subsidiary. Now, KKR Jupiter Advisors will buy out the entire stake of the company in that petrochemical subsidiary. So that means that about $464 million of total debt will no more be consolidated in the accounts of JBF Industries. Additionally, it will also eliminate all contingent liabilities as guarantees that were given to lenders. In addition, the subsidiary will also return 450 crores which were given as intercorporate deposit by JBF Industries. Now, this 450 crores will be used partly to repay lenders and reduce debt, and the remaining will be used towards working capital. Now, the company has said that this 450 crores, whatever used as working capital, that will help reach full capacity in the next 2 quarters and improve profitability for the company. The stock ended 5% higher yesterday. Possible to see further up move on this counter. So that's another one to watch out for. Oriental Bank of Commerce has said that the board will consider raising 1,000 crores via QIP in its meeting on August 30th. So you could see some marginal positive reaction there. That apart, in a bulk deal yesterday, you had Welspun Enterprises promoter pick up about 0.8% stake. So let's see if we see any small positive reaction on the back of that one. And finally, you have Alcargo Logistics, which will be meeting Premji Investments amongst some other investors later today. So that's another stock that you should keep an eye out for.
Well, Jet Airways reported a weak set of numbers for the June quarter ended. Now, if you see the headline numbers, the revenue of the company was higher by close to 6% to close to 6,000 crore rupees. But on the EBITDA front, the company reported a loss for the second consecutive quarter. Now, in this quarter, there was a loss of around 382 crore rupees, while the net loss amount was close to 1,300 crore rupees. This is higher than what the analysts were expecting, and also higher compared to last quarter, where the company reported a net loss of close to 1,000 crore rupees. Now, it was a weaker rupee, higher fuel cost and competitive affairs which impacted the June quarter numbers of India's second largest airline company. Now, rupee depreciated by close to 4%, because of which the company reported a foreign exchange loss of close to 365 crore rupees. Now, as jet fuel prices were higher, the company's fuel cost also shot up by around 53%. Now, passenger yields were down by around 2.5% compared to last year, and most of this pressure would have come from the domestic market of Jet Airways. Now, if you see the domestic front, though passenger growth was around 10%, the revenues from the domestic business grew only 3%, while on the international segment, though the passenger growth rate was negative 1%, the revenues from international segment were higher by around 9%. Now, lastly, in this quarter, the finance cost of the company was also higher by around 27% to close to 249 crore rupees. Now, from the cost reduction plans of the company, the key things which stood out were, firstly, the company has said that it is looking to reduce its debt, which it could do by either infusing funds in the company or by monetizing its stake in the jet privilege. Second, the company is also aiming to reduce its total cost by around 2,000 crore rupees over the next 2 years. And lastly, the company will also reduce its non-fuel cost per available seat kilometer by another 12 to 15% over the next 8 to 10 quarters.
The State Bank of India is currently working with a list of about 63 stress accounts. These are accounts that have been identified by the bank due to the February 12th circular of the Reserve Bank of India. Of these 63 accounts, about 23 accounts belong to the power sector, while the remaining 40 are from the non-power segment. All in all, it put together about 12 accounts out of these 63 would be resolved outside the NCLT according to the bank's estimates, while the remaining accounts have either been referred to the NCLT or are likely to be referred to the NCLT in the coming few weeks. Now, these points also raise some questions about the way the bank has been able to garner support from the remaining bankers in trying to find a resolution plan that can be applicable and implemented in all of these stressed companies. Without the ability to do something like that, it is unlikely that future resolutions will be possible even under something like this assured scheme.
Let's also get your check on the delivery stats that we got as of yesterday. The first stock that you have to keep in mind, that would be Havells India. Now, that was up nearly 3% in trade and saw delivery buying of nearly 83 crores. The delivery volume surged more than the total volume. So the delivery volume was up about 113%, while the total volume surged more than 50% as compared to its 5-day average. Second stock to watch out for, RBL Bank. Now, that too was up about 4.5% and saw delivery buying in excess of 150 crores. The delivery volume and the total volume surged about 73% as compared to its 5-day average. Last and final stock to watch out for, Page Industries. Now, that was also up about 3.1% and saw delivery buying in excess of 170 crores. The delivery volume surged about 61% as the total volume surged about 67% when compared to the 5-day average.
Well, there's clearly lots to talk about over the course of the day, not least of which is the key levels with regard to the benchmarks and whether that 39,000 mark can really be hit for the Sensex. But if you're looking on the website right now, you'll find a few stories that are definitely worth reading. First up, a government committee has suggested that to declutter the company law tribunals, procedural or technical lapses or routine offences may be decided through an in-house process. As many as 11 companies, including Videocon Industries and Gemini Communication, will be shifted to the restricted trading category from the 3rd of September for not complying with listing rules related to shareholding disclosures. And French energy giant Total SA will exit the Hazira LNG regasification terminal in India by selling 26% stake to its partner Royal Dutch Shell. That's all you need to know going to trade today. Up next is Indian Open, and it'll take you through market open. Thanks so much for watching. This is Bloomberg Quint.